episode of Bullish Chips, where we talk about chips and only chips. More specifically, the Direxion triple leveraged semiconductor bull ETF, better known by the ticker symbol of SOXL. Today is Wednesday, July 9th. I also need to take time to let you know that I am not a financial advisor. I'm not telling you how to trade, what to trade. Anything you trade must be within your own risk parameters and um, based off of your own research. So just want to get that out of the way. Any opinions expressed on this channel are just that, my opinions. So I just want to give everybody what I see in the market, specifically for SOXL, and you can use it as kind of another tool in your toolkit if you feel as though my analysis is complete and thorough. So just looking at today, it was another really good day today. Made most of our money in the morning, actually all of our money in the morning today, from a day trade or scalp perspective, but we were able to also add a couple of contracts for August to the upside and at the bottom of the day today, and take advantage of the bounce that we did get off of the bottom today. Will we continue to push up? We'll see. Things kind of stalled out in the second half of the day. As you can see, we're here on the 4-hour chart, and we got a fat one inside bar directly in the middle of this 3. So 3 is indecision because it tried to go down, it tried to go up, end up back in the middle. A 1 is indecision because it didn't even go up or down really, it just stayed in the middle. So if we pull out to or zoom in more to the 15-minute and take a look, please remember that I do update my broadening formations throughout the day, so these are more up to date than yesterday, at least from an intraday perspective. So we can see the second half of the day just went flat, and look where it went flat at, right here at opening print. Remember, with my charting, the opening print is always this price level 1. It's the first price of the day, so that's why I leave it labeled price level 1. You see that we opened strong, broke through last week's high, but look at where we were rejected at, right here with the convergence of essentially 2 daily broadening formations in these orange lines, and then this purple line being the weekly broadening formation. So we knew that was going to be a pretty big area of resistance, not to mention we're still sitting here around this monthly downtrend line. So expected a lot of chop, a fight between the bears and bulls. We said that last night, we said that the day before, probably said it the day before that as well. But that's what we're looking at, that's what we're faced with, and why, if you follow us on Twitter, you'll see that we've said, especially on those downside puts, don't overstay your welcome. Get the profit, let them hit the target points, and let's get out of there with profit. If we go down to our more granular intraday chart, you can see the levels, right? So it looks like we're missing the weekly broadening formation. I'm not sure why that's not there, but we had it on our swing chart, so that's a good thing. But yeah, so we had our broadening formations, which it rejected off of. It came back down to this was this last week's high, and kind of stalled out here for a minute at the end of this candle and the beginning of this candle, but then proceeded to just drop out, and again catch a little bit of activity around overnight low. Overnight low overlapped with the 4-hour trigger to the downside, so we knew that was going to be another strong level, and then it went down, basically wicked through the 78.6 of the 2024 run up, and almost bounced off the top of last month and last quarter's high. So we got a bounce there, back up to the overnight low. You can see there was a fight here over overnight low, further solidifying this was a good level for us to have out there. And then when it did break through, it went up, had a little bit of of a fight at opening print once again. Went back up further to where overnight high and this monthly downtrend line, along with the 4 hour up trigger, all coincide. So that was going to be a big point of resistance. We can still break through it. We just ran out of time today if it is going to continue to break through it, but we could see the rejection at least on the smaller time frame there. One thing we do want to pay attention to is on the 1 hour. Let's see. We had a lower low, right? This is a low, this is a lower low, but it was following a higher high, right? So we're just getting a broadening formation. So we can see we've got the 1 hour broadening formations here, this lighter blue color. And we're just waiting. We're right in the middle of it, so we're just waiting to see which way we're going to get out of it. We did push back up at the second half of the day, but there's still plenty of room between here and here to make a lower high, right? So we could make a lower high, excuse me, and turn back down tomorrow. We could just open up and push down tomorrow. Let's see, overnight. After hours right now we're down 9 cents, so nothing major, but we're down, we're not up, so something to just keep an eye on. Let's see if we scrunch things up a little bit. Yeah, we haven't even really tested last quarter and last month's high along with this 78.6 of the 2024 run up. We haven't really tested this level too many times. We've got a couple good bounces off of it, but we've also broken down through it. This week's opening print is around here as well, so it looks like we're still just kind of ranging at this point. With the push up this morning, I thought we might actually get to the year flip and get everything going to the full time frame continuity to the upside, but we fell a little bit short, which is fine. We still had a big push in the early morning, and we had to get down more on the micro time frames to find the entries, which we treated them like scalps, but they followed price action really well. They had clean price action, I should say, throughout the move. So we were able to treat them not so much like a scalp we only planned to be on for 5 minutes, but let it play out a little bit longer. Excuse me. So we can see here, we did push down at first. As soon as we poked back above opening print, I just went ahead and bought some calls. Looking at internals, they were incredibly bullish. The breadth was 3.5, I believe, or 4.5, one of the two. But either way, very bullish. The volume was bullish. The tick was bullish. So I grabbed a couple calls and said, let's see where they can go. Expirations were next week. We got the push up, and once we got the kind of equal high, we went ahead and set a stop at the bottom of this candle, and once this pierced it, we were stopped out. It did push back up a little bit more, so we could have made a little bit more money, but I was fine with the money that we made. And then we turned around and got the lower high here. I believe we'd have to go back and look at the tweets. It might have been on the 5 minute we got a lower high as well, but I know we were in the 1 minute quite a bit. Yeah, it was on the 5 minute. So as soon as this candle right here breached the low of this candle, we went ahead and bought some puts. We rode that down to the overnight low, sold all but one, left a runner, got a little bit more profit here, but we were stopped out. This is the 5 minute. We got down to the 1 minute, and there was a point at which we were able to set a stop slightly lower than the overnight low. Yeah, it was like right here. We got that lower high. Oops, let's make this a little bigger. So we saw we got the lower high underneath the opening print, so we stayed in the runner. It was either this lower high or this lower high that we set, one of the two, but on this pushback up, it got stopped out. So we only made a little bit more than the contracts that we did that sold at the overnight low at the target. But a couple more dollars never hurt anybody. After that, we were so far below. We were still below overnight low. We were still below opening print. So our rules, you know, I'm not going to buy anything long. I'm not going to go to buy any calls if we're below overnight low and opening print. Once we got up in here in between the overnight low and opening print, I still stuck to the rule because we were below opening print, and we still have swings for September, November, and January of 26, January 27. What I did do, however, was when we got the higher low. Let's go in here on the 5 minute. Actually, it might have been on the 15. I need to go back. I would have to go back and check our tweets. But there was on this higher low on the 15, I did buy one call for the August monthly expiration, and then when we got the higher low here, I added two contracts to that same call, for the August monthly. So we are up on this contract. This contract we're about even, maybe even a little bit negative. So not incredibly green, but still closed green. We've got our foot in the door, or we've dipped our toe in case the market wants to push again tomorrow. We don't have to worry about trying to chase something without a trigger. We're already in. If it does decide to pull back, we've got the option to go ahead and stop out for a small loss, or if we want to maybe stop out of all but one and let that one ride a little bit, that wouldn't be too bad of an option. We bought, I think, one strike out of the money, so, or no, two, might have been two strikes out of the money. So we will, we still have a relatively high delta, so any pullback is gonna eat into our contract. So I'm probably gonna go ahead and just stop out of all of them if we get a decent pullback tomorrow. But we can always re-enter, and again, we already have the swings that we're already in. I'd rather use my money and focus really on any downside plays, downside triggers, getting in there, getting in at good positions, and managing those down. Again, we're in a pretty bullish market, almost full time frame continuity to the upside. We don't have the year green yet, but any puts that I'm buying, again, I'm not overstaying my welcome, because we could still put in. Let's go out here to the 4 hour. So let's see, with the 4 hour, we could still pull down. We wouldn't make a lower low until 24.62. So we've got another $2 that we could pull back, and the low of last week was, or the 50% of last week was 25.15. So that would be a good place to possibly bounce. That's where we got a bounce here on Monday. Broke down a little further, but maybe this time we just come down and maybe barely wick through it, but get the higher low here. We can still continue on up, because that would be following a higher high, which keeps the daily uptrend intact. So there's no reason to be trying to front run puts at this moment, swinging puts, thinking that we're going to get a big pullback or anything like that. There's nothing to signal that yet. I personally probably won't swing any puts until we get a lower high on the day. That we'll be able to see that coming, because you'll get the lower high on the 4 hour first, probably. If not the 1 hour, you'll get it on the 1 hour. So we can continue to monitor things. If we do want to swing a put overnight, there is that option if we have the right trigger. But I wouldn't be swinging anything longer than that, probably, until there's a definitive trigger that we're gonna get a bigger pullback. So The end of the day didn't really help us out. It just petered out. Didn't really do anything. So I guess we've got a lower low after a lower high. So technically on the 15 minute, we've got a downtrend technically, but it's not deep, it's not drastic, and we're still within a 1 hour uptrend and a daily uptrend. So you know, again, shorts are still on the table. Puts are still on the table, but don't overstay your welcome. Get your money, get in, get out. Um, Again, this is not financial advice, but that's just how I'm talking to myself, as in, get your money, get out, and continue to just assess and look for that trigger on a higher time frame, or a larger time frame, to let you know when to get into a longer dated put. Let's see. So yeah, we don't have any contracts expiring this month anymore. The shortest term contract we have is the three that expire for the August monthly. Then we've got the September and November's. So we keep seasonality in mind. Um, the end of July, things start to taper off for tech. So I plan to sell probably even my November calls by end of July, early mid August, if we get some type of extended run. Um, and be looking for more downside. That's just my what I expect, but that I'm not saying that's what I predict to happen. I'm gonna be nimble both ways, just like I was today. Make money either going up or down. For any of you that actually watched through the video yesterday and caught the gem that I gave out about the 9th and the 19th of each month, I'd say we got a good little dose of the 9th and 19th action. That's what I'm going to call it, the 9th and 19th action. We got a little bit of that today. We got a pretty decent pullback. May not have ended the day red. I would have to look at, let's just look at SPY. So SPY wasn't red, but it wasn't hugely green. But let's get back to what we know. It's chips. So we didn't have a huge day to the upside. I will say that we had pretty big drawdowns. So 9th and 19th action right there. We're able to recover a bit from it, but petered out. So not sure who won, bulls or bears. Guess really nobody, because we ended the 4 hour on with the inside candle, and the first 4 hour was an undecided up and down. So nobody really won today. Tomorrow we'll look. Let's go to the day. So we did get a 2. Let's get these out of here. We did get a 2 up, but it's a doji, right? Positives we can take from it: it's a green doji. We did make a higher high and closed with a higher low as well. So candle to candle, we're higher high, higher low. We're poking outside of this monthly downtrend line a little bit more than we have the past 2 times we've tried it. We're getting closer to that year flip, so a lot of people are probably have that, seeing that as well. We're not the only ones that have that information. So me personally, I'm leaning more bullish right now, short term, mid term. But we've got to keep on our toes. So let's see, this high is 27 flat. Yeah, we breached that. So the next high we're reaching for is this 32.64 on the day and on the week as well. But let's look how the week is shaping up. The week, we, like you said, we went 2 up. Not quite a hammer, a little bit more wick than you would want for a hammer, but it's definitely green. We're not close to being red. Well, we're somewhat close to being red, but we're definitely green. And yeah, no real reasons to be too bearish anything longer than some scalps. So let's get back in here and set up our charts the way we always do. And if you're new to the videos, we do this every day. it's just part of the strategy. As you can see from the today's video and the levels that the price action went to on SOXL, our levels are pretty spot on. So there's a reason why we do this. It gives us, basically an edge. It gives us a system. It gives us a repeatable system. It gives us a repeatable system, which is the most important thing, because yeah, we can do this every day on SOXL, but I can take this same system and apply it to any ticker symbol. I'll take the challenge any day from anyone. You give me the ticker symbol, I'll go chart it and I'll go trade it, and I guarantee that it'll be effective. Because as long as the rules are followed, as long as I'm not out here just going willy-nilly with it and ignoring the rules, the system works on anything. So just quickly moving these 6 little indicators, because yes, now that we've moved the 4-hour triggers, we'll go in here to the 5-minute extended hours and map out our overnight high, overnight low. Let's get it together. So here's our overnight low. We'll chart this out. That's our low. We'll get the overnight high from here, and I believe that is it. Yep, if we look at the line, that is it. So let's go back to our micro. This is our scalping chart. All right, it's got the marks on everything down to the 15-minute. I'm not gonna totally fill up the chart getting all the way down to like the 5-minute, but 15-minute gives us a pretty granular look, and you can eyeball anything on the 5-minute at that point, if you really need to. There we go. So there we go. Take this extended hours off. Let's go back to the 4-hour. Right. All right. So this is what we're. Oops. There we go. So this is what we're looking at. Right. 4-hour. Look at higher territory. Right. This is our week's expected move box. We're basically in the middle of it still here, trying to push to the upside. But let's go over to our notes. Let's duplicate this. Thursday. So tomorrow is the 10th. There will be 119 trading days left. Gotta remember there are 250 trading days in a year. Let's see, our closing price is $26.65. Alright, so our 4-hour trigger would be a 3-1-2 down. Trigger being the low of the one, which is $26.45. Oops. So this is a red 3, green 1, 2 down. Alright, we'll get to that in a second. So the magnitude, once we breach the bottom of this 1, would be the bottom of this 3, which is 25.89. And an extended target would be the bottom of this candle, 25.36. And then we can bring 25.15 back into play. And we'll leave the 24.62 on there as well. Alright. Lower low is still this 24.62. But we didn't have that in there, so let's get that marked in there. So now let's look at our upside targets. So 3, 1, 2 up would trigger at the 26.79. That's crazy. and the target would be 2741. Right? So then our target, let's see, next would be 2813. And let's go down to our scalping time frame chart. 2807. Yeah, we don't even have any real. I guess we can go ahead. Let's get a fib extension going here. So let's go with the move from this low to this high. Oops, that's not what we want. We're going to go from this low to this high to this pullback. So we got 28, that lines up there with the 2807, so 2868 would be our next target right here, 2868. 28.68. And the higher high, let's get out of here so we can see. Since we did go lower here, the higher high, first higher high would be 2741. So we should be able to knock that out pretty easily. Alright, so the magnitude of the 4 hour is always the trigger for the 1 day. Right? So let's go to the day chart. Let's get things mapped out. And so tomorrow, if we go 2 down on the day, that gives us a 2 up, 2 down. Trigger we've already got mapped out. The magnitude would be 2536, which is the target, the first target that we had. And then we'll use these as the follow-up targets. Oops. Alright. This low is 2462. 62. Alright. So 2 up, 2 down. If we get the 2 up, 2 up, then we got it pretty simple. 2741. These are the targets. We got 3264 as the higher high. And just like that, we've got our targets, right? Targets for the 4 hour, just using the strat. Targets for the day. We're no longer above this 2665, so we're not bold here, right? It just shows that we've triggered it. Underlined shows that it's triggered. If it was bold, then we would still be in it, but we're not. We are still in the month strat. We're at 2665. The trigger was 2584, so we're still above it. So we're underlined in bold here to the upside. 2584. That's the same here. I don't know why these aren't bold. I thought we went through this last night, but anyway. So we're in the 2 up, 2 up. Magnitude 3615 for this one, magnitude 3246 on this one. You can see one of our targets here for the 3 2 up 2 up is 3236, very close to this 3246. So again, I'm looking for the 32 to 36 range to be our ultimate target here before we get the cool off at the end of the summer, beginning of fall, that tech usually goes through. That's just how I'm looking at things personally. Let's go out here. If we just get a little cleaner chart for us here, right? If we're looking at it from the day perspective, man, and it's like I said, I don't use half of this stuff, so oops, MACD. I don't even know how to remove it. There we go. Let's apply that. There we go. That gives us more room to look at the actual chart, right? That's what we want to look at. Right, so we're looking good, but again, we're coming up here to this chop zone. We've got the monthly downtrend line, but if we can break it, break above the year flip, we're green. That gives us a lot more, momentum and weight behind the push up through this chop zone. we'll be in full time frame continuity. Man, we'll be running, right? So got to be looking out for the continue to push up. Hope you're still in the game. Hope you have longer, not just day trading, but you've got swings that you can swing over multiple weeks, if not months. Again, we have pushed very hard. We have a gap to the downside, so we could see some pullback. But again, we're going to wait for the triggers on the higher time frames for our day. That's what we'll look to really look for, like day trades to the downside. Right now, we're just looking at scalps. If we get a lower high on the 4 hour, then we're looking to see if we can get a lower high on the day. If we get a lower high on the day, now we're looking to swing some puts. But until then, again, scalps to the downside if you're going to get into the downside. Longer dated swings, don't get too far out of the money, otherwise you're not going to make any money. But yeah, that's what I'm seeing for what we've got coming up, what we've seen happen today, and what we got coming up. So you can see we're looking good. Nice V-shaped recovery. Getting towards the top of the V though. We're getting into this chop zone. So just stay active. Look alive. Make sure you know where all your marks are at. If you know this like the back of your hand, then nothing can catch you off guard, right? You're ready for anything up or down. Stick with your rules. Let's continue to make money every day consistently, even if it's just a little bit. A little bit is more than nothing, and it's definitely more than losing something. So I hope today's video was informative. I wish I could give you some more in-depth breakdown of the market. Maybe give more nuance, but we are where we are, right? We're pushing anything right now to the downside. It's just pullbacks, and people are loading back up on longs because we continue to push higher. We don't have any catalysts to push us to the downside this week, really, unless some crazy tweet or some crazy news comes out. There's no economic news. So yeah, options expiration is coming up next week. Those are usually flat-ish weeks, if not down. They don't, especially expiration days usually finish red. So we want to stay on our toes. There could be a turn down next week, even if it's for a couple of days before we get a pop back up. We just want to be ready for it. If you like today's video, please do all the YouTube stuff, like, comment, subscribe. If you didn't like the video, let me know why. Constructive criticism is always welcome. I'm always ready to get better. We're only a few episodes, maybe 10 episodes, less than 10 episodes into the channel. So, whatever I can do to make it easier for you guys, I'm glad to do it. Just let me know. Make sure you follow us at Twitter, at Bullish Chips, and make sure your notifications are on YouTube. That way you can know whenever we drop the nightly videos. Thanks again. I hope everybody had a good day trading today. Get you some rest tonight, and hope everyone has a great trading day tomorrow.